Ahead of the open, we are calling the Australian market up 0.4% at 49.50. Of course, this is a sharp recovery from some of the lows we saw yesterday, just below that 4,900 level. We do still feel in the short term we could be in for a little bit of weakness. That will see us retest that 4,900 level, which was a key consolidation level for the market for a while. Of course, there will be strong focus on some of the resources today after commodities got a bit of a lift from some poor US economic data. We did see US GDP, unemployment claims and pending home sales data all miss expectations. And really this appeased the Kiwi camp, which feels that this might force the Fed to keep the current rate of its asset purchases every month. So this is definitely positive for the risk space. We do expect we are looking at a 1.1% gain for BHP just from its ADRs there to about 34.98. But of course we did see iron ore lose a little bit of ground. It's just been drifting gently and of course underperforming the rest of the commodities space. But gold's been a different story really. Of course it's a pretty good Kiwi story for gold at the moment. So it's back well above that 1400 level. So we might see it hold steady and continue to trade at above 1400, and this should be supportive of the gold names. Of course yesterday they had a bit of a lift, but couldn't quite hang on to early gains because of the weakness that was across the rest of the market. So we'll probably see a similar situation today where they open a touch higher. Whether or not the market can hold on to early gains today is still debatable, especially considering that confidence has been largely rattled across the investment space at the moment. We've experienced sharp drops in a very short space of time, and this is never really good for confidence. We do of course have some pretty important data out of Japan today. We've got their CPI, unemployment rate and household spending, along with manufacturing PMI due out, and this will be a key day for the yen and what sort of impact it has of course on the Nikkei and Japanese equities over there. So if we do manage to get some stability back into our Japanese markets, this could be positive for Asia. I think the sharp drops we've been seeing in Japan over the past few days are not healthy at all for investor confidence for the region. So this will be of course the main thing to look out for today. As it stands, we are calling Japan's Nikkei up 1.6%, while the US dollar yens actually continue to drop. And the headline from Japan's Nikkei newspaper suggesting that they're looking at imposing new rules on forex margin trading has really put a dent in the dollar yen, which had made some ground up overnight, rallying back above 101. So it's really still all about Japan. But of course we can't ignore the Aussie dollar. It got a bit of a lift from the improvement in the risk space. It came within striking distance at the 97 level. We do feel that any minor surprises to the upside will definitely give the Aussie dollar a lift, just mainly because investors had been overly on the short side. So on the way back up, I think a lot of stops will be taken out. There'll be a lot of covering going on, and that might see the Aussie versus the US dollar drift towards that 98.50, which is key resistance in the near term, and potentially sellers will start coming in at higher levels, just because at the moment it looks like it could be in for some short-term strength. We also have China's PMI numbers due out tomorrow, expected to be to come at 49.9, which is of course contractionary territory. Any surprises to the upside will be probably good for confidence in the region.